Alrighty, good morning everybody. It is Monday, March 7th, 2022, and we're going to get started here with our pre-market analysis on the S&P 500 futures market. So real interesting, we came down in the overnight set, actually came up just a few hours before midnight on the Pacific here, came right to our eye level to the tick, sold off, came right down to 42.40 here, broke it by 2 points, and now we're attempting to come up and fill that gap from the overnight session. So Friday we ended up closing up here at 43.20 quarter, and then in the Globex session you can see we gapped down, opened about 20 points lower, maybe 15 points lower there, or maybe 10 points lower, and then went ahead and sold off in the overnight. So looks like the bulls are trying to come up and fill the gap right now. And that's where we find ourselves coming into this morning. So let's go ahead and do what we do every Monday morning, and that is scrutinize our higher time frames, and then we'll get down into the intraday time frames and look for some good levels coming into the open. So first things first, I'll just look real quickly here at our yearly chart. It's just interesting to note that we did come down, break 50% of the last year's price action, but have found some support and have broken right back up above it. So that's the only thing I could really note up here on the annual chart. And then down on our 3 month chart here, still, we've got the bearish divergence from the all-time high, but still up here in a very bullish section of our RVI range, which we talked about in our study session last week. And things are still strong, still not out of the weeds for the bulls whatsoever here. A pullback all the way back to 3,700, 3,450. I mean, these are just about another 1,000 points down if we get down to a 50% retrace of this leg here, and we're still technically in a bullish market from this perspective. So still not quite out of the weeds here, even though we're continuing to sell off. And then down on our monthly chart, same thing, a nice clear bearish divergence and a nice clear exhaustion pattern from our all-time highs. However, we're still, not quite out of the weeds here for the bulls. Even if we do continue to sell off another 5, 6, 7, 800 points here. Other than that, really nothing else to say up here. We're still right at the beginning of our of March here, so a lot more time for this monthly candle to develop. And like I said, we do have potentially these major wicks to the downside from the last two candles that typically we see hold for continuations higher. Just looking back to historical data here on the chart, every time we see that happen, we do see continuation, or we see the market go sideways and eventually and hold the lows and then eventually go after that. So just be aware of that. We will have to come back and revisit this throughout the month here. And let's get down now to our weekly chart. One last thing, just want to mention, looking at RVI, we talked about this in our study session last week. Our quarterly and our monthly still up in some of the strongest areas of the RVI range. So there's still no indications of weakness from that kind of perspective. When we get to our weekly charts, this is kind of our first mixed bag when it comes to ranges. So for anyone who was in the study session last week, we're holding below 60, but we came down and held 40, right? So the weekly is a pretty ambivalent time frame when it comes to range rules. But then again, up on the weekly here, we talked about that potential reversal candle just a few weeks ago. So I think anyone who's been in our Monday study session or our Monday pre-market has been here for the discussion of that. So we've got a nice potential reversal candle there going from, I believe, 2 weeks ago off that 41.0175 low that we made. So just kind of watching that. And remember, the weekly was really, as we dialed down from these really high time frames, coming down to the weekly, that was the first time frame that gave us our first bullish clue off of that low at 0175. So we'll see. The last week's candle, if we just go back here, the candle that closed on Friday of last week looks somewhat bearish to me, maybe a little bit more ambivalent. So the last week's candle looking a little funky in there. In fact, looks maybe a little bit like the reversal candles we got up off that 45.86 high. So we'll see what happens here. There's really not much else I can eke out of this weekly chart other than to say it's the first chart as we dial down that gives us our bullish clue, and we are somewhat ambivalent here on our range because we're still holding 40. So weekly has the potential bullish case. The daily still showing that bearish divergence from just a few days ago. So when we were back on March 3rd, we came in and said we had some good indications that there was a bearish divergence off of that high. Sure enough, once that candle closed, we actually had the signal there. So going into the afternoon of March 3rd, we had a nice clear multiple time frame bearish signal up from the highs of March 3rd at 44.1875, and since then we've gotten this nice pullback, this retracement of this leg right here. So that's what we have here on the daily. Notice what's going on right now. We're starting to find some bullish cooperation right now, and so there has been a nice bounce off the overnight low here to turn this candle green at the current moment. So we'll have to come back and revisit this chart after this candle prints here. But right now we're contending with a bearish divergence from the highs back from last week. So if the bulls end up pushing this morning and we get through that high up there at 44.18, that will be a clue that we're done with the potential pullback here. So we want to be pay attention to that. And if we do end up, and there's actually one thing I want to mention here, we came up and remember our first expected resistance, just going off of some of the major swing lows on our daily chart. That low, remember, 22.75, and remember we said we had 44.15 to 44.2275, that little 5, 6, 7 point range up there that we expected to be trouble for the bulls. Sure enough, they came up to 44.1875, right in between that little zone there, and pulled back. If we end up coming up and getting through there, the next relevant major swing low is up there at 44.3850. So just another maybe 10 points above the high that where we rejected from could be another potential trouble spot as the bulls progress up. So just be aware of that. There, it wouldn't be surprising to see the market pull back, come back up to that high there, break it by 10 points, come right to that other swing low, and get a failure from there for continuation lower. It's just one possibility out of a million, but I just want you to be aware of that swing low there. And then any further from there brings us right into this major support zone that we tested actually once so far, right here at 44.8475. So that would be that next target to the upside if they do get through that one level I just mentioned here at 44.38. That would be a nice clean smooth sail up into that area. So that's what we have here on our daily. Again, notice where we bounced. If we look at the retracement from the 0175 low to that 1875 high, we're basically holding right in that 50 to 61 retracement area, which is a nice healthy retracement zone that we typically see bounces from. So we'll see what happens here. Let's go down into our intraday time frames now and take a look at some areas that we want to pay attention to this morning. So looking off of the overnight low here, we have a good confluence of bullish signals. So that low happens to be 42.38. We just pulled back and bounced from it just within the last 2 or 3 hours, I believe. There is a nice 4-hour and 60-minute bullish signal from down there. And you can see this follow through that we're getting here to the upside, right into the shaded region here I just shaded a few minutes ago before we started the pre-market. So this zone here between the close of Friday and 50% of the previous day with our eye level at 24.50 is my first expected area of resistance this morning. So it looks like we're coming right into it at the moment. Again, not too surprising, right? We came down to 42.40 here in the overnight session, broke it by 2 points, bounced at 38, and now we're coming up right to 43.24.50 once again and rejecting from it. So that was, I was going to come in and show you this was my first expected resistance zone, but it looks like we've already gotten there and gotten a nice pullback off of it. So that that is that right there. That was going to be our first expected pullback area. If the bulls end up getting through there, I marked two major swing lows that I'm watching here, and then this little zone right up here around 43.50. So if the bulls continue to push out this morning, and remember, it doesn't have to be a straight line. The market could zigzag back, a little three-leg pullback to then come up higher. It could just launch directly up through all this stuff. So it doesn't have to be a straight line. But if the market does continue to trek higher, you want to be aware of this swing low here at 43.41, and then the 61.8 retracement of the sell-off from 44.1875 all the way down to the overnight low here happens to be right around this shaded region, which happens to be just about 43.50. So again, just like in the past, we've talked about 44.15 to 22 being interesting. We talked about 43.98 to 4400 back here being interesting. These are all levels that we typically will see the market have rejections or supports from. So sometimes they're really close together. And remember, just for the last week or two, we basically had a number of levels all within maybe 5 or 10 points of each other, and the market still came right into the first one, got rejected, came back into the first one, got rejected, then came up, came into our second zone, got rejected. So even if they're close together, it doesn't mean that they're not going to use them nice and cleanly and use one, pull back, and then use the next. So just beware that we have the swing low right there around 43. What's the actual number? 43.41. And then just a little bit further up, that little zone around 43.50 happens to be the 61.8 retracement. Anything further than that is going to bring us right into that little division between the two structure zones that I mentioned for the last few weeks. So if we get through 43.50, would not be surprising to see something go on somewhere right around that swing low that I highlighted there at 66 down into that 60 area. And that is that major zone. If you zoom all the way out and look to previous price action, that was a major zone that bifurcated the top and the bottom ends of the major chop block. So just be aware, it's basically 43.60 area with that swing low at 66, 43.50, that 43.41 swing low, and the region that we're rejecting from right now. These are the areas that I was watching coming into the open here, or coming into the pre-market here before I met with you guys. Any further than that, getting through that swing low at 66, there is the previous daily high that might get something, but I'm looking at more so a push to come back up and retest that 43.98 to 4400 level, and then our next expected resistance zone here between 15 and 22. So that's what I'm looking at to the upside here this morning. If they end up really, really chugging and getting through all that stuff, remember that there's other levels we have above us, but we'll have to come back and reconsider that if we do get up there. 44, 45, 50. This was our next major zone once we got through all this stuff down here. So if we do get through that, I'd be looking at a target up to 45, and then I marked this 44.55 area because I believe that happened to be exactly a 38% or a 50% retrace of the whole sell-off. So just be aware of those levels. On the flip side, let's take a look here. If we end up holding, and again, remember, we don't really know what's going to happen next. The market could zigzag around, it could come up into 61 and fail. Whatever happens, if the market does start to come down and get through 42.62 down here, well, first of all, get through the the previous daily low, get through 42.62, which is also our orange power level this morning. That's going to open us up for a retest of the overnight low. And then from there, the nice part about, well, I guess the best way I could put it is we never came back down below about 42.40 here for a few, maybe even for, let's see, for at least a week. So we've already mapped out all these levels below here. So once we get through the overnight low around 42.40, everything else is basically there. We've got this 61.8 retracement right around 42.22 to 42.23 here. Wouldn't be a surprising area to see some type of reaction from. A little bit further, it's right back to our power level or our eye level at 42.13. Of course, we've got the swing high there that's at 42.16. So there's a little bit of a range between 13 and 16 there. And then a little bit further down, it's back into this zone. And these should be familiar from last week. We have 41.89 up to the major swing high there at 41.97. So it is what it is, a little 7-8 point range. And then a little bit deeper than that, if we get through 89, I think it's a pretty straight shot all the way down to the next major swing high here, just around 41.64. And then 51 happens to be that major eye level. So there's a little zone there, a little zone here, and then we've got 13 to 16, and then just about 42.22. These would be targets to the downside. So if the market does end up starting to kind of pull back here, wouldn't be surprising to see a little bounce out from there. That 13, and then down into this 89 area, and then down into 51. However it's going to work. I'm just highlighting the little regions that I would expect to see a bounce, just like we saw right up 42.40, just like we saw right off the rejection, right off 15 to 22. So that's what we're looking at coming into the open here this morning. Let me see if there's anything else outside of the major levels that we expect there to be support and resistance from. Let me just go back and see if there's any other important things to mention here, just from a signals perspective. So want to once again reiterate, the daily has a nice clear bearish divergence from the high at 18. So you want to be aware of that. If that needs to be broken to the upside for any faith in a continuation for the bulls. On the flip side of things, our overnight low down here that we pulled back and bounced from not too long ago does have a nice confluence of bullish signals. So the question is going to be here coming into the open, is this bullish signal on the higher time frames going to get the follow through to come up, get through 50% of the previous day, which is where we are rejecting from right now, our first expected resistance zone. And then if they can get through there, can they get up through all of these other contention zones and get through the high that I told you? We have a nice confluence of bearish signals from the daily all the way down. So nice clear bullish one off the overnight low, nice clear one off of the high from last week. Outside of that, looking at our range rules here for anyone who was in our study session last week, notice where the 4 hour is made a divergence and is holding right now. It's holding 40. That should be a clue that you guys should understand after last week's study session. And then on our 60-minute, you can see right now, this is going to be telling right here. If we can get through 60 on RVI and get through there, we might end up coming right back into our bullish zone. So just be aware of that. And I think that's basically it, guys. Again, the fact that we pushed right to our first expected resistance zone and we're getting trouble, for all we know, this could be the high of the day. So just be aware. I think that's basically it here. Looks like they're attempting to go ahead and chug back up and retest this high here at 24.50. Notice how well all these eye levels are basically outlining the price action here this morning. Really good stuff. So Have a great day, guys. I hope that helped you orient yourselves coming into the open. Remember that all of these resistance zones that we mentioned above us and all of the support zones that I mentioned below us are really, in my opinion, areas as targets for you to take profit at. So if we start to rip higher, it makes sense to get long and take profit in front of those areas I mentioned. And if the market continues to sell off, makes sense to get short and take profit going down into those potential support zones. So have a great day. We'll be back on Thursday to do another pre-market. Hope you guys have a great week, and we'll see you then.